In the last lesson, we built and saved strategies, and today we will put them through robustness tests. Why do we test the quality of strategies? Backtesting is a great start, but it's not enough. It only shows us how the strategy responded to specific historical data. Data that we already know, but the market changes, new cycles, new volatility, and new situations. That is why we test the quality of strategies to verify that they can withstand conditions they have never encountered before. Robustness tests help us identify which strategies are just nice theory and which have a solid foundation and can work in the real world. A backtest is the first thing every trader does. They take the rules of the strategy and test them on historical data. We get an equity curve that often looks really beautiful. Regular growth, low drawdown, stable results. And here comes the trap. Shortly after being deployed, the strategy stops working. We test the quality of strategies to eliminate that chance. Many strategies only work on a narrow range of data or in one specific period. And until we expose the strategy to various market conditions, we cannot know if it really works or not. Robustness tests are our safety net. In our case, we will use a total of 3 robustness tests. The first is the fastest, the second is like medium, and the last is the most time-consuming. The first one we will do is Monte Carlo trades manipulation. This is a very quick test that randomly shuffles the order of trades to verify that the strategy works even with a different sequence of wins and losses. The next one is Monte Carlo parameters randomization. This is a slightly more time-consuming test that slightly randomizes the strategy settings such as indicator periods and monitors whether it still maintains similar results. The third test is system parameters permutation. This is the most time-consuming test and is a very thorough test that tries all possible combinations of parameters to confirm that the strategy is not dependent on one lucky setting. So, the first test is Monte Carlo trades manipulation. We will do 200 simulations and filter by return drawdown ratio at a confidence level of 95%, which must be greater than 50% of the original value. This condition basically says that at least 95% of the test results must be higher than half of the original value. In other words, the strategy must remain profitable and stable even after random changes. It must not fall apart. The second test is Monte Carlo randomized parameters. We will perform 100 simulations and the filter condition will be the same as in the previous test. The last test is system parameters permutation. We will perform 500 simulations and we want to see that the original value for max drawdown is greater than 75% of the median value and that the Sharpe ratio from the original value is less than 125% of the Sharpe ratio from the medians. For the robustness test, go to the custom project module in StrategyQuant and use the Open Existing Project button. And you should select the robustness CFX file, which you can download directly below this video on the course homepage. Upload the project, go inside, and here you can see 3 tasks again, these 3 individual tests. So the first task is the first test, trades manipulation, Monte Carlo trades manipulation. In the settings, we take all the settings from strategy. Only in the automatic retest tab, we set source databank results and target databank MC trades manipulation. In the cross-check tab, the Monte Carlo trades manipulation test is selected. When I click on it, open it, it is the first test with the exact method, 200 simulations, and we will filter according to the condition I showed you in the presentation. Return drawdown ratio at a confidence level of 95% must be greater than 50% of the original value. The second task, meaning the second test, is randomized parameters. The source databank is trades manipulations and the target databank is MC randomized. Again, in the cross-check tab, you can see that selected Monte Carlo retest methods here. When I open it, it is randomized strategy parameters, and we make 100 simulations, and the filtering condition is the same as in the previous first test. The last test is system parameters permutation. We will take it from the MC randomized databank and send them to the sysparperm databank. And the cross-check is here. Here is the given test setting. I see that the maximum number of tests is 500, and we filter by max drawdown and Sharpe ratio. So this is how we have set up our custom project. Now we have to upload the strategies to the results databank using the load button from the folder where we saved the strategies in the last lesson. 735 strategies will open for me. And since these tests are time-consuming, with this amount, the test would take a very long time, maybe, let's say, several days. So in the very first step, we have to sort them out a little manually. The best way to do this is to use the filter by correlation button. When I click on it, I set it so that I want to filter out all strategies that have a correlation greater than 0.3 on a monthly basis. And I click on filter. Here I see message that 719 strategies have been deleted, meaning I'm left with 16 strategies to test. Now, here in the progress tab, I click on the start button and let the test begin. In the next lesson, we will look at the results of the individual tests and, of course, evaluate the results. I'm really looking forward to seeing you, and if you are looking forward to seeing me too, like and follow this channel.